They already know. Before you place a trade, before your finger even hovers over the button, the system has already profiled you, not because you told them anything, but because every hesitation, every panic click, every rage exit, every moment you stare at that red number builds a psychological fingerprint more precise than anything you ever willingly submitted. Brokers don't need to guess when you'll panic. They can predict the exact second you'll break. Just ask Michael. Michael was a disciplined trader from New York. He believed in strategy, risk management, logic. But logic doesn't work well when someone else is quietly studying your weaknesses. It started subtle. He opened his platform late at night trying to catch the futures market before it moved. He placed a trade confident. Suddenly, the price spiked against him just enough to hit his stop loss, then immediately reversed. Not once, not twice, dozens of times. It felt like someone was watching him place every order and hunting him. He thought it was coincidence. He thought markets were chaotic, but chaos isn't processed in milliseconds. Algorithms are. Picture this. You're on the trading app. Your heartbeat lifts slightly as profit appears. You tighten your stop. You drag your target. You tap your screen twice, hesitate, and scroll to check another chart. That minor hesitation, 0.85 seconds, gets logged. A broker AI records it as user fear behavior triggered near small drawdown, low confidence. They save it, and it comes back later to bury you, because that's the game. They wait until your emotions make you predictable. And once predictable, you're profitable for them. People think brokers earn from small spreads and commissions. Cute. The real money? Behavioral liquidation. They see that you always close early when green, but hold too long when red. They track how impulsively you increase lot size after a loss. They know exactly when you turn reckless. They know the moment your hands stop obeying your brain and start obeying fear. They know you. Michael didn't believe that. He trusted his broker. A big US platform with a shiny blue logo and the promise of supporting the retail revolution. But revolutions rarely benefit the rebels. Because while you think you're playing the market, the platform is playing you. The platform tracked when he checked his portfolio most, 9:30 a.m. sharp, every morning, looking for action. They optimized notifications to arrive exactly then, not to help, but to trigger FOMO. The market is moving fast. Don't miss out. Not advice, a trap. When he ignored the notification, the app displayed a flashing hot movers banner where his watch list usually was. Price change percentages, bright greens, pulsing reds, unfiltered emotional bait. He clicked, and the algorithm smiled. It noticed his heart rate jump, his scrolling speed increase, his tap pressure heavier on red days than green ones. Yes, they track tap pressure. They know when you're angry. And the moment he opened a position in panic, spreads magically widened. Liquidity magically thinned. Slippage magically appeared because his panic had a dollar value. And his discipline, they were counting on it to eventually fail. Michael started noticing patterns. Every time he raised his lot size after a few wins, the market suddenly turned. Every time he moved his stop loss a little further, the market wicked just enough to take it. Every time he hovered near the close button, the candle violently extended down like it wanted to force his hand. He thought he was cursed, but he wasn't cursed. He was studied. Imagine this scenario. You open a trade. It's in small profit. You think, maybe I should close. You wait 5 seconds. In those 5 seconds, the price dips. Just a tiny sting, enough to activate doubt. You close, scared, and immediately after, the price rockets in the original direction. You feel stupid, frustrated, emotional. You chase the move. You enter again, now rushed, now reckless, now perfectly predictable. And then you lose big. You were not outplayed by the market. You were manipulated by your behavior statistics. Here's the truth most traders never hear. Brokers don't trade against charts. They trade against your psychology. The chart is just a weapon. Your mind is the battlefield. The more you refresh your screen, the more emotional instability they detect. The more frequently you adjust trades, the more impulsive they flag you. You think you're being careful, but to them, you are announcing, I am vulnerable. Push me. They know the exact dollar amount that triggers your greed. They know the exact loss size that triggers your fear. They know you will hold losers dangerously long because you're ashamed to admit defeat. They know you will take tiny profits early because you don't trust yourself to keep winning. So guess what they do? They optimize the market environment around your vulnerability. The chart moves specifically where your fear lives. Michael began noticing how the order book flashed large buy orders right before dumping the price. Fake orders. Algorithmic illusions designed to make him believe demand existed. Phantom depth. If he bit the bait, the illusion vanished. Just like that, because those were not signals. They were traps triggered by behavioral data predicting exactly when he'd emotionally react. Ever wonder why brokers offer free training, practice accounts, and community success stories? Because they are not onboarding traders. They are onboarding behaviors. They are mining predictable emotional reactions. And if you're wondering whether it's legal, yes, because you agreed to it in the terms of service no one reads. Your location, your browsing habits, your watch time on each chart, the positions you hover over but don't take, all recorded. They don't just know when you panic, they engineer the moment. Michael thought switching strategies would help, but strategies don't matter when the enemy is inside your head. He tried day trading, he tried swing trading, he tried scalping. Every time, the familiar algorithmic pressure pushed him toward the exact moment he historically broke. He realized something. Losing wasn't random. It was scheduled. The darker truth, most platforms offer multiple account types, standard, pro, VIP. But the type that really matters is hidden. They secretly classify traders: profit risk seeking, panic sell prone, revenge trade behavior, FOMO trigger responsive, stop loss mover, late entry chaser. Each category has different market manipulation playbooks. Each category gets custom designed pain. Your broker already knows if you are the kind who will blow the entire account after 3 losses. They know if you'll deposit more when you see a near win. They know if you take a break when angry or double down. They know if you trust the news or fade it. You are not unpredictable. You are extremely measurable. Michael finally hit his breaking point when his broker sent a push notification minutes after a huge loss. Take advantage of market volatility right now. The timing felt intentional because it was. His loss wasn't bad luck. It was data extraction, and they wanted more. So here's the question every trader must ask. If the broker profits from your losses, why would they allow you to win consistently? The moment you become consistently profitable, something changes. Spreads widen more often, withdrawals take longer, execution delays appear at the worst times, indicators recalibrate. The system treating you like prey suddenly treats you like a threat, because profitable behavior is not predictable behavior, and unpredictability must be neutralized. You want to survive? Then you must erase your psychological fingerprint. Do not check your P&L during trades. Hide it. Watching numbers flash triggers emotional impulses the algorithm targets. Trade levels, not money. They can't manipulate a reaction you never express. Do not widen stop losses. Set them before entry and never touch them. Stop loss movers get special treatment, and it's painful. Do not increase size after wins. Size equals vulnerability. Slowly scaling only after withdrawal success breaks their confidence model. Do not rush entries on market spikes. Spikes are usually engineered traps, liquidity hunts designed to flush emotional traders. Do not react to notifications. Turn them off. Let silence kill their influence. Most importantly, plan your exits before entering. Write them down physically. The moment your finger starts improvising, the algorithm wins. Michael adopted these rules. He deleted the app from his phone. He stopped staring at charts like they owed him a response. He traded less often, more mechanically, emotionlessly. His behavior became boring. And boring traders break the system because there's nothing to exploit when there's no fear to extract. Slowly, profits returned. The candles no longer wicked him out by a cent. The price respected his plan because his plan gave it no fear signals to attack. His account grew, not wildly, not explosively, quietly, like a secret the algorithm was struggling to decode. That's when he realized the final truth. As long as you crave excitement, someone else will profit from your emotions. The unseen algorithm is watching your behavior right now. But you can vanish from its map by becoming the one thing it cannot predict: calm. Trade like a machine. Think like a hunter. Feel like nothing. And next time the market swings violently and you feel the urge to panic, remember, that urge isn't your intuition. It's the algorithm pressing your buttons, hoping you'll break on schedule. If you found value in this truth, don't let it stay silent. Like this video, Comment your experience if you've ever felt targeted while trading, and subscribe so more traders wake up to what's really happening behind the screens. Share this with someone who deserves to know the truth. Because the retail revolution doesn't begin with winning trades, it begins with breaking surveillance. Now, breathe, stay calm, and take back control. The algorithm is watching, but now you're watching it back.